The Nifty 50 is down by 11% since its peak in September 2024, so it's officially in what they call the correction mood. But it's not just the main index that's struggling. The Nifty Midcap 150 has dropped even more, losing 16%, and the Smallcap 250 is taking a big hit too, down by 19%. These indices are starting to approach what's commonly referred to as a bear market. Well, we have been talking about this for a while now in our weekly Bullseye editions, but we thought we could piece these clips together to understand what's really going on. So let's dive in.
Talk about this weird market, Saloni. This market rise, the market fall, and this market rise again. What's really going on?
So aren't we also used to seeing our portfolios in green, at least from the last few years?
Yeah, the red does feel bad.
Yeah, it does feel bad, right? Of course, thanks to the bull market that we saw.
Yeah.
But October was a reality check for all of us. And now the start of November has been kind of carrying forward that red, as you mentioned, right? So it obviously isn't exactly fun. When we talk about our benchmark indices like Sensex and Nifty, they actually had their worst month in October for over 4 years.
Yeah.
And while the dip does provide you an opportunity to rebuild your portfolio, it does make you wonder, why the markets have been so moody lately.
Yeah. I think over here also we have like three reasons, right? Primarily. And at the end of the day, we have to remember that the stock market is a function of what companies actually earn, right? The earnings, the profits, whatever you want to call it for the companies. And that's not looking too good, right? The September quarter results are coming in weaker than people have expected, right? Many companies are actually reporting zero growth. And out of the 34 companies, Nifty companies that have reported, earnings have been flat. So they're missing all these analyst expectations as well, right? And that's the worst thing to happen when you miss an analyst expectation. So brokers are downgrading earning predictions, and that's kind of dragging down the market sentiment a little bit, I think. And, there is a slowdown in the economy as well that's happening. So there is something that's, hanging over like a dark cloud over the stock markets, right? But I think there's more to what's happening externally as well, right?
I think there's one more thing that's all that's happening in the United States, right?
Yeah.
First, obviously, you have the US elections where there's this, very tight race between Kamala Harris and Donald Trump. And because of this uncertainty, obviously, investors kind of want to be wary of what happens next, right? But after that is also the Federal Reserve meeting outcome that happens this week as well. And even though we know that Fed is going to cut rates, the quantum of it is something that's not known. And that's again, and also the clear indication of where the Fed sees the interest rate journey to happen, right? And that's what we will get to know this week.
Right.
So I think once we have a better clarity of that, maybe investors will know. But I think right now, because of that, they are being very cautious.
That's fair. And I think they're also foreign portfolio investors, which make up a decent chunk of our market. They're also kind of in an exit mode right now, right? Part of it could be due to the US elections where they're moving to safer haven assets, but also because of what's happening in China with the, the Chinese government and the Politburo, they're trying to prop up their stock market and their economy. Foreign investors might be thinking that from a relative value perspective, China might be offering better opportunities than India right now, right? And a lot of them are definitely moving there because of the high valuations in India. The one thing that is, I guess, propping up the Indian markets though, are people like you and me and, everyone else who's watching, the domestic investors, where the SIP book is insane over the last 5 years, the growth of the book, right? So then that's keeping the market, I guess, intact.
Now, the first few days of the new year kicked off with a lot of market turbulence. Just in the first 4 trading sessions, the BSE Sensex crashed around 2,000 points, while the Nifty 50 shed over 2%. Worries over Donald Trump's tariff plans, the spread of HMPV, FII flows, a stronger dollar, inflation, growth concerns, and the cautiousness ahead of the Q3 earnings are all adding to the market uncertainty. And the headline of government saying India's GDP growth hitting a 4-year low in FY25 certainly did not help. But amid all this chaos and sell-off, what is expected for 2025? Well, Morgan Stanley believes that India still could be one of the top performing emerging markets in 2025. In the global brokerage words, with strong earnings, macro stability, and domestic flows, it is hard to argue against India's investment case. But another brokerage, CLSA, has slightly a different view. It says that Nifty's returns will likely be low in 2025 as stock prices are still pretty high compared to their usual levels and even its peers, especially with the global situation looking very uncertain and risky. They even mentioned that US President Trump's policies could affect countries like India and China that rely a lot on exports. There's also uncertainty about whether interest rates will be cut, and the US dollars is only getting stronger, triggering the Indian rupee's free fall. Also, the recent market adjustments and the government trying to cut back on spending are something to keep in mind. Although most experts are focusing on a few trends to watch this year. The earnings growth of Indian companies, the US trade policies, their impact on global trade, the union budget, and even the changes in global monetary policy while keeping inflation in mind.
Saloni, let's talk about the big thing that is concerning everyone, which is the small cap index kind of flirting with bear market territory, right? The small cap index had fallen 20% from its peak. But also the Nifty 50 is maybe on track for its worst performance since 2001. And what I mean by that is, in 23 years, we have never had a situation where the Nifty 50 has had 4 consecutive red months showing up, right? So that is looking like a very real possibility now. And when the index fall, going back to the small cap index, when the index falls by 20%, that is when people officially call it a bear market. Yes, it's recovered a little, but that's when people typically call it a bear market. So what gives over here?
Right. Now, even though small cap index bounced back in Wednesday session and even Thursday, today, the concern still lies about the valuations that these, stocks have, right? There's a measure called price to earnings or PE ratio, that's like the crudest way to look at how expensive or cheap a stock is. So if a stock is trading at a PE of around 10, that means that investors are willing to pay 10 rupees for every rupee that stock makes, right? The higher the PE, the more expensive a stock is, right? And that is generally the theory of how you measure PE. Now, anyway, just a few months ago, when the asset management firm Capital Mind, they released this data that looked into small cap index, they found that the PE for the index was over 35 times. And in comparison, large caps were trading at around 25 times PE back then. Now, of course, small caps are considered riskier than large cap, right? So investors were willing to pay more of this money just to participate in the small cap stocks, because small cap stocks are always, looked at chasing for those growth potential,
Right.
those big alpha returns that they, make it seem like. And that created a sort of froth in the market. But of course, we need to remember that the risk that comes with it is very high, right? Now, but this sell-off that you've spoken about, that has hit the smaller stocks more than large caps, right? Around 222 stocks have dropped 60 to 96% from their 52 weeks highs. Now, 52-week high is the highest point that a stock trades over the last year.
Got it. But we spoke about small caps, but we also started by saying that the Nifty 50 is on track for, one of its worst 4-month performances. So what's happening with large caps also? I understand the PE and froth, but what's happening with large caps here?
So with corporate earnings slowing, investors are wondering if Indian stocks, they're justifying the valuations and the premiums that, we all have been paying for, right? Especially when you compare it with other emerging markets. Because nearly 40% of listed stocks have tumbled around 30 to 95% from their 52-week highs.
Got it. So, but at the end of the day, we do have to point out that you can't catch the bottom of the market. Yes, it looks scary, but we have seen that the long-term trend of the market is up. In periods of froth, like we have seen high valuations when people get excited, there's bound to be a correction where things revert back to the mean, right? But long-term investors, the only thing that we would probably say is don't try to catch the bottom of the market and try to time the market. Look for stocks that are still fairly valued. A lot of mutual funds are still lapping up stocks, so keep that in mind.